Hi there, everyone, and welcome to this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances, and you need to decide for yourself whether it's appropriate to you. Okay, what a week it's been, guys, already. First day back after a long weekend, and look at our market. That has been a substantial fall. A lot of the selling did start last week. Obviously, as you know, that was Friday, skipped Monday, and that's today. So, the selling did start, really kicked off from the US Thursday last week. From top to bottom, we're down already 4.5%. Big question, is this going to be the start of another correction? If so, your correction level target is around about down here near 68 once again. Okay, we almost got there last time. Well, we did achieve that last time. So, are we going for a second one of those? No, possible. It's on the table. I'm a little bit doubtful that's going to happen this week as such. I think we might have a bit of reprieve in between if it's going to happen. Something similar to back here, right? We've got a bit of a drastic sell-off sideways, and then another bit of bad news comes in and kicks us down, right? That's I think more likely than us going straight down as of tomorrow onwards. That's kind of how my gut feel is at the moment. Only time's going to tell, guys. In these scenarios, it's very hard to predict what's going to come next, right? It could be a 2-day wonder, rebound. Anything's on the table right this second, I have to say. There's no way of predicting this. All right, so let's just sort of go across and look at the US markets as well, and then we'll talk a bit about the dynamics of what's happening out there and why this is happening. Um, I'll, First, let's finish off the technicals here. We're still on the trend, guys. We finished right on the trend. We're just shy of the 200-day moving average. There's some serious support levels here. Um, yeah, and that's promising to me. That means we could have seen the worst of it for the time being. So I can't say until these support levels break. If these break, you got 72 in between. That's the next really, really key level, as you know. Okay, that's the bottom of the channel. If it clears that, then we're going for the correction in my mind. Okay, so there's two levels left, really, on the way down. I think at both of these levels, if we're going to go for a correction, we can have a breather. So this is where I sort of suspect we could have a bit of an up day tomorrow. See what the rest of the week brings after that. That's kind of the feel. S&P 500, just kicking across to that real quick. They came down some pretty key levels, right? That's bear market territory, guys. If that support level breaks, that's bear market. You're starting to get lower peaks, lower troughs. Things are getting dangerous, right? So, are we going to see the US markets give back some of these gains, right? They're crazy gains. When you bring it out to here and have a look at where the bottom of COVID was to where they reached, it was over 100%. All right, you had 100%, 100 and something odd percent up there. Okay, 110%. That's huge. That's huge, right? From pre-COVID levels to where they ended up was a 40 odd percent increase. I can't even see the percentage on my chart, right? It's hidden behind other text. It's so hard to find it. 40% increase from the highs of COVID. Is the US market going to give some of that back, guys? Is this one big whopping head and shoulders pattern, right? Big question there, guys. Big question. Once again, it's on the table. All right. If we draw in the neckline, uh, I'm a bit thereabouts on this, guys. If that head and shoulders breaks, then we're coming back to about 4,000, just around that 4,000 level there. Actually, you even call that lower. What am I saying? 3,600. That'd be your target. I'm not saying that's going to play out, by the way, here. Absolutely not. I only call these patterns when they finish, when they complete. It's not a complete head and shoulders yet, guys, and you'll only really see it mainly on the weekly as well. Flick that across the weekly, and that's where it looks a lot more like a head and shoulders, doesn't it? Right, shoulder, head, shoulder. Look, it's there, right? I'm not saying it's going to play out, but it is there. We need to keep an eye on it. Nasdaq, similar sort of story here. Key levels, right? You can see it here on the weekly, 12,500 thereabouts. If that clears, then bear market territory, guys. It's getting dangerous. All right. Not there yet, guys, but we're testing it, and we're going to be keeping a very close eye on that in the coming weeks. Okay. All right. So what's changed? Okay. Why are we participating in the fall this time? That's the big question. And I was pondering that all day Friday, going, why are we participating now? Why are our miners all of a sudden falling off their perch? Because the miners are in the best condition they could be from a commodity price point of view. Yes, their production's a little bit low, but why are they falling off so drastically? The falls in BHP just didn't make a lot of sense to me on Friday. Today they make a bit more sense, right? Of what's playing out in China at the moment. So what are we seeing, guys? Look, over the weekend we saw a lot of news headlines talking about further lockdowns in Beijing. It's not reality just yet. Okay, there's talks of it. What they're doing in Beijing is doing mass testing at this point of time. Okay, so will that turn into mass lockdowns like that's happening in Shanghai and other cities around China? Maybe, right? But that's the speculation that we're seeing on the market at the moment, is that Beijing will head in the same direction. Only time will tell. But as a result of this happening, we're seeing selling happening across the board, right? But particularly what affects us is the commodity space. So over the weekend, we saw crude fall back below 100. We saw copper off about 7%. We saw silver off 7%. For some reason, gold got hammered down lower as well, right? But so all that industrial metal space got hammered down. Iron ore was off 10% in the futures. It's recovered a little bit today. But that's what rocketed our market down today. It was led, yes, most sectors were in the red, but it was mainly led by the materials sector today and energy. Okay, so energy and materials really fell out of bed the most out of all of this. So China lockdowns for me is the trigger for the bit larger sell down here in Australia. A few other things that I want to talk about here today. Obviously, one is, have bond yields topped out? Okay, so what we've seen of recent is that the US 10-year bond has, the yields have topped out about 3%. It came back to about 2.8 overnight. That raises a lot of questions to me, because when you look at the dynamic out there, and it's a confusing dynamic right now, there's a lot playing out here. The reason why the bond yields have gone up so much is because people have sold out of bonds. They sell out of bonds when they think interest rates are going up. Okay, so it's the bond market, bond investors pricing the fact that interest rates are going up. But at what point do you say that maybe the bond investors have gone too far, right? Especially here in Australia. Like, it's hard to even think that interest rates can go up that much here in Australia without completely blowing up the economy. So look, there's a few things to digest here. Why would bond yields maybe top out and come off a little bit? Well, if China does go into lockdowns, that is going to take a lot of pressure off the inflation issues that we're seeing at the moment. We could easily see bond markets, see oil markets come back off significantly here if China stays in lockdown for long periods of time. So that's really the big thing here, guys, isn't it? Right? Commodities demand will come off drastically if China stays in lockdown. And that could take a lot of pressure off the inflation issue and take a lot of pressures off interest rates. There's a lot of could be's here, right? We're in very uncertain times, guys, with a lot playing out in the background. The bond market will tell you, give you hints on what the investors are thinking, and I'll be watching this closely in the coming days and weeks. If bond yields start backing right off, that means people are thinking, okay, well, what's happening in China is taking the pressure off commodities. So it all works hand in hand, guys. What I'm seeing at the moment is commodity prices come down, pressure comes off inflation, pressure comes off the bonds. Okay, um, and people start buying back in on the view interest rates aren't going to go up as much as what was first thought. So it comes down to this paradigm between value and growth. Okay, at the moment we're seeing value get dumped and growth get bought up. That was the theme last night, and that theme's going to change on almost a nightly basis. So let's keep an eye on that dynamic, guys. It's simple. If interest rates are going up and commodity prices are going up, value stocks will tend to be bought up. If interest rates are going down and commodity prices start going down, people are going to move out of value into growth. And that paradigm is something that you're going to have to watch over the next year or so. Because, guys, that's where the money can be made. If you want to beat markets, this is the type of detail you've got to go into, right? Where do you want to be right now? Well, it has been value. Okay. And will that paradigm change, or do we want to get straight back into value again? That's what the question you're going to ask yourself over the next few weeks. So BHP, Rio, Fortescue, they've all brought up some interesting levels, right? They've fallen a huge amount over the last few days, okay? Do you jump into them or not? And that's going to come down to what commodities do next. If China stays in lockdown, okay, I wouldn't be jumping back into value just yet. The moment I feel we're out of the woods with China, jump back into that commodity space, that value space very quickly. So it's going to be an interesting one, guys, right? If China goes into lockdown, there probably won't be anywhere to hide, okay? If we see much of China go into hard lockdown for a long period of time, the market will just correct, okay? The selling will be across the board because you've got supply chain issues, and then you'll have money probably flowing back towards bonds as a safety mechanism. So money will come out of equities back into bonds. That will bring the yield curve back, the yields back down. All right. So next big thing, as I said, central banks. Right. Keep an eye on those central banks, guys. We're going to see the Fed meet next week, Thursday. We are pretty certain that we're going to see a 0.5% rate increase by them. So that's pretty much cooked into markets. I think it's going to be more of a sell the rumor, buy the fact scenario here. I wouldn't be surprised the market comes back up after the Fed meeting next week. We've also got the RBA Tuesday. Be very uncommon for the RBA to touch rates on either side of an election. As you know, we've got the election at the end of May. All right, so 21st, 22nd of May is the election. I would not expect any rate changes this month. It might be June or July. So but we will be really looking closely at the commentary from the RBA next week. So yep, central banks next week. That's the big one, guys. But you've also got US reporting for the rest of this week and part of next week as well. So there's a lot of earnings results coming out, and markets things are a bit all over the place, to be honest. Right, some stocks are doing well, some aren't. We saw Netflix down 30-odd%. So it's a very volatile time, guys. Not only is there so much uncertainty around interest rates, we're also starting to see how that's reflecting in people's behavior and in consumer behavior. Also starting to see how that's reflecting in companies' earnings and what we're likely to see moving forward. So yeah, guys, it's going to be a bit of an interesting few weeks ahead. But nonetheless, we'll keep pushing through it. As I said before, guys, look, all we can really do in times like this is lean on the technicals. And if support levels keep getting taken out, all we can assume is that there's going to be a correction. If we start seeing levels hold, then probably just whip around. I'm probably more on the sideways camp than bearish at this stage. In the short term, I think we've already had a fairly big whack in a very short period of time. US markets are very close to very key levels. I think it's going to take a fair bit of bad news to see the US levels break. And then what it really comes down to for us is commodities pricing and what commodities do next. If iron ore keeps crashing, we're going to fall further, guys. That's the big one for me. All right. So look, guys, I think I've run through a lot of information through this video. I hope you kept up with it. Yeah, guys, look, there's corrections on the table. It's possible. A bear market's on the table. It's possible. It's all going to come down to a lot of different factors that are going to play out over the coming weeks and months. Okay, if central banks go as hawkish as they're talking, that's one thing. If China goes into lockdown, that's another thing. And what commodity prices do next is another thing as well, right? So they're the main sort of three factors to keep an eye on right now. Not to mention one last thing before I end this video. Tomorrow we'll see Australian CPI numbers. They're also something really important you've got to be keeping an eye on. At this stage, our inflation numbers aren't as high as what we're seeing overseas. Even in New Zealand, they're seeing much higher CPI readings than what we are. So we want to stay that way. if inflation stays in check here in Australia, the RBA won't have to raise as quickly as other countries have. So CPI is very important. Keep an eye on it. Love yous and leave yous, guys. It's been a big day on the markets, so let's leave it there. Take care and bye for now.